Tesla stock today hit an all-time high at over $525 per share, and the company is still trading up more than 5% on the single-day chart. And there's a ton of room for the company to continue to climb up even higher. So in this video today, we're going to take a look at Tesla stock, go over the most recent headlines surrounding the company. Of course, we already know the news that they will be added to the S&P 500, and take a look at some of the headlines following that event and some reasons why the Tesla share price could climb past that $550 mark, go over some future prospects for the overall business, and just take a look at Tesla as a whole. Tesla is one of the most popular companies on the market. It's going to be the 10th most valuable company in the S&P once they are added in the month of December. And there's so much positivity going around the company right now that I think we could see another rally even higher past this new all-time high. Goldman Sachs believes there is still more than $8 billion of funds that will be bought into Tesla stock over the next coming weeks, and we're going to break down where those money is coming from. And also we have some new buy and bullish perspectives from some of the largest financial institutions in the world, saying that there's still over 20% potential upside in Tesla's share price from where it is today. And we're going to go over some of the future growth prospects for the company, some revenue estimates moving forward, and what various analysts believe is the future for Tesla. So if you're new here, everyone, I am the Gen Z investor, and every single day we talk about the stock market. We go over different stocks you can buy and sell within your own personal portfolios. And in this video, we're going to focus on Tesla, discuss the most recent news surrounding the company, go over the fact that they hit a new all-time high today and are climbing up more than 5%, and just take a look at how we believe the company is going to grow moving forward over the next 3 to 5 plus years. So if you're new, please hit that like button, subscribe to the channel. We post every single day about the market, and we're going to jump right into this Tesla stock analysis. So on the 1-year chart, we have seen insane performance from Tesla stock. They are up close to 600%, and Tesla currently trades at a market cap of $464 billion with a forward PE of 204. Now we're going to break down some of the newest news headlines that came out regarding Tesla. Goldman Sachs says that there is a potential for an $8 billion buying spree of Tesla stock, which could send up shares even higher. This is because the new addition to the S&P 500 on December 21st is going to have to be bought by all the large cap funds that track the index. A simple S&P 500 index fund is one of the most popular investment models out there across North America. And all the funds who mirror that index are going to have to purchase Tesla shares for their portfolio. So of the 189 large cap core funds in our universe, 157 of those funds manage around $500 billion in assets and do not hold Tesla. So that would mean with the appropriation of Tesla being the 10th largest company in the index, roughly around $8 billion worth of shares being purchased by these funds in order to mirror the correct S&P 500. So this is a potential $8 billion buying spree into this stock. Of course, I'm sure by the time of this video, some of these companies have already purchased their Tesla shares in order to mirror the index, but some have not, and there will still be billions and billions of dollars pouring into Tesla shares because all these funds have to choose to mirror the new S&P 500 and the new look of the index. And Morgan Stanley, since 2017, has not been bullish on the company. They've had a more neutral or bearish perspective on Tesla. But for the first time since 2017, they see a surge of potential more than 20% for Tesla and have a bullish call on the stock. So for Morgan Stanley's latest report, they noted that the upside potential in Tesla remains strong. And for the first time since 2017, the electric car maker was upgraded to overweight, and Morgan Stanley set a price target at $540 per share. From where we sit today around that $517 mark, there is still significant upside potential for this company moving forward. And we can see Tesla continue to climb past that $540 mark, past $550, and even higher moving forward. So this is the first time Morgan Stanley has upgraded the stock since 2017, and it's great to see firms that were traditionally bearish on the company change their perspective and have a good future outlook, because Morgan Stanley believes Tesla is more than an electric car manufacturer. And they tied in all of Tesla's future service revenue into their valuation model, which has set this new $540 price target. And moving forward, they expect Tesla's service revenue to be around 6% of the overall company and represent over 20% of the profit by 2030. So another point made by the analysts at Morgan Stanley was that they see Tesla's other services being worth more than the car business as a whole over the next decade. And that's very important to note because right now, people see Tesla as a car manufacturer, and that's all they see. they don't see the future outlook of the business, and there are other services within the Tesla infrastructure that can really help the company grow and expand. And these analysts from Morgan Stanley believe that Tesla should be compared to a company like Apple. Apple was originally known for the iPhone. That was their core product and a core driver of their revenue. But over the past 5 years, they've done a beautiful job of expanding away from just the iPhone. They have other Apple products, and one of the fastest growing networks within the Apple infrastructure is their services, making up around 15% of total revenue, which are growing at a fast rate, and those are the factors of the business that are going to allow Apple to be sustainable over the long term. And these analysts from Morgan Stanley believe that Tesla has the same sort of infrastructure, and they see that Tesla's other services are going to be worth more than the actual car-making manufacturing part of the business. And they actually use this, different proportion of value within the Tesla infrastructure in order to come up with this $540 price target. And they actually break it down how they see it growing. And one of the analysts from Morgan Stanley says, to only value Tesla on car sales alone ignores the multiple businesses embedded within the company and ignores the long-term value creation arising from monetizing Tesla's core strength, driven by best-in-class software and auxiliary services. And his 2030 sum of the part valuation puts $254 per share to Tesla's core automotive sales, and that makes up only 47% of his total price target for the company. So he sees the other parts of Tesla being more valuable over the next decade into 2030 than the actual car manufacturing business. Some other networks he sees growing very fast is that Tesla's network services, comprising of everything from the company's superchargers, driver assist software, premium infotainment, and performance upgrades, get a large chunk of the price target, representing 164. So another significant part of their business is their network services and not the actual physical car product. Ride hauling is another part of Tesla's infrastructure that is only going to grow moving forward, and he dedicated around $38 of the $540 price target to that part of the business. And another service which he believes is going to grow is Tesla Insurance, which has just launched in California and is expected to grow once they expand that out of that one single state moving forward. And one thing to mention, like I previously talked about with regard to how Tesla should be compared to Apple. Apple has grown their service revenue to represent 40% of overall profits. That is absolutely incredible because the high margins from their service revenue really drive the business forward. And Tesla can do just that. Morgan Stanley believes that their service revenue and their service income will make up a large chunk of the company's business, and the actual car manufacturing will represent around 45% of the overall valuation. So the fact that these services with such high margins are only going to grow moving forward, I think it can send Tesla shares even higher, and I do think that this $540 price part at the current level is represented as fair, and I do see the bullish perspective coming out from Morgan Stanley. So now we're going to move on and take a look at some analyst reports for Tesla stock, which go over some future growth outlook and some expectations for the company moving forward. So from their annual revenue expectation, in 2020, we were expecting 25% annual revenue growth, and in 2021, analysts are expecting some exponential growth into annual revenue, up over 82% in 2021. So if Tesla can hit this number, the average revenue expectation for the year 2021 is coming in at around $45 billion. I'm sure we will see a couple surges in share price if we see these massive numbers. And with regard to earnings per share surprises, the company has reported 5 positive surprises out of their latest 6 periods, and you can see when they have beaten on earnings per share, they have done so by a significant amount. And if we take a look, analysts right now have a buy rating on Tesla. Although they have seen a massive run-up, it is still consensus for a buy, and you can see earnings per share estimates moving forward are expected to continue to perform nicely, going upwards each and every year. The 1-year average forecast sits at 97 cents per share, then up to $2.66, and the average 3-year forecast sits at $4.35 per share. And with regard to total revenue, average forecast for this year is $31 billion, up to $43.7 billion. The first report has around an estimate of around 45, so similar estimates from various different reports. And if you take a look, the 3-year average revenue estimate for Tesla sits at over $58 billion. So I think the company has a lot of future growth moving forward, and if they can hit these numbers, I say we see share prices back up over $600 per share. And if we take a look, this is very interesting. So over the past 3 months, more companies are getting bullish on Tesla. So as Tesla has been rallying and as the share price continues to hit new highs, more analysts are getting bullish. So in the month of August, only 22% of analysts had a bullish or very bullish perspective on the company. 22%. In September, it went up to 33% of analysts. So 1/3 were bullish on the company. And in October 2020, 36% of analysts are bullish. So more than 1/3 are bullish. And you can see over time, over the past 2-3 months, more analysts are switching their perspective to bullish on the company. And moving forward, we're expecting some massive earnings per share growth. Q4 of 2020 expected to grow by 118%, followed by 255% expected growth, 120, and finally 43% expected growth for earnings per share over the next 4 quarters. So huge, huge high expectations for Tesla, and hopefully they can deliver with these results. And if we take a look, they're finally posting some positive ratios. And that is a solid sign for investors who actually take a look at fundamentals and not just hype or not just momentum. So investors who care about fundamentals, it's tough to own a company like Tesla because of how high they've run up and how high they're trading with regard to their actual earnings. But you can see here some nice growth numbers. 2017, 2018, and 2019, every single time for return on equity, return on assets, and return on investment, it was negative. For 3 consecutive years, you can see all negative. But the company has actually turned it around. In the past trailing 12 months, return on equity, 4.76. Return on assets, 1.78. And of course, return on investments, 2.68. So of course, these are nowhere near where we want the company to actually be at full scale. But it's great to see finally we're seeing some positivity in these important ratios that show management effectiveness. We're seeing some increase year over year, and you can see improvement over time. 2017, return on investments was negative 11%, then down 5, then down 3, finally positive. And you can see for all 3 of these ratios, each and every year, they're getting better and better. And I'm sure moving forward over the next future 12 months, all 3 of these ratios will improve once again. Now on the later half of this video, we're going to take a look at the balance sheet and the cash flow statement. So we all know the income statement for Tesla has been growing. Year over year, they've been beating revenue expectations, and revenue has been growing at a fast rate. And their bottom line has finally turned positive over the past 5 quarters. So just over a year now, they've been positive for 4 and 5 consecutive quarters because that is what made them eligible to join the S&P 500. But we're going to take a look at the balance sheet. So right now, they have total current assets of $21.7 billion compared to total current liabilities of $13.3 billion. So as of right now, they have a very strong short-term financial position. They have actually more cash on the balance sheet than all of their total current liabilities do within the next 12 months. So it just shows that over the short term, we don't have to worry about any of their debt payments affecting the business, and they can sustain operations over a short term. Over the longer term, they have around $45.7 billion of total assets compared to total liabilities of around $28.2 billion. So another overall strong ratio, and I'm not too worried about the company with regard to their financial health right now during the short term or over the longer term as well. I'm not worried about bankruptcy like we did see 5 years ago when Tesla had the potential to go under. A much different business with a much stronger balance sheet right now. And with regard to the balance sheet, you want to see total equity growing year over year. And that is what we see each and every year. Total equity has been growing for Tesla, a good sign for strong financial health. And if we take a look at the cash flow statement, a couple important factors you kind of want to see is cash flow from operations growing each and every year. And that is exactly what we see here. In 2015, huge net loss, a lot of cash outflows from operations. They weren't profitable just yet from operations. They were spending more money and more cash than what was coming in. And you can see here, each and every year, the strong progression to cash flow positive in 2018, up in 2019, and in the past 12 months, $4.3 billion of cash flow from operations. Investing activities, nothing too crazy here. Capital expenditures, of course, building infrastructure, nothing too scary or nothing too uncommon from this section of the cash flow statement. And finally, the financing activities, they paid down debt, they issued some common stock to gain some market share and, of course, collect some cash to run the business. Again, nothing too shocking from this part of the cash flow statement. And overall, the net change in cash is positive $9 billion over the past 12 months. So again, kind of expected, nothing too mind-blowing from the cash flow statement. Good to see cash flow from operations growing each and every year because that is one of the key metrics from this report. So that was kind of a quick little valuation from Tesla. We saw some big news headlines that could drive the share price even higher. They are up more than 6% today, reaching an all-time high during intraday trading, and I think the company can continue to set new highs. I don't see anything really stopping Tesla as of right now. I don't see them hitting that like trillion-dollar market cap over the next year, but I do think as the company can continue to maintain operations, if they continue to hit their delivery goals, expand their business, they have a strong future outlook over the next 3 years with regard to battery life and an extended battery for a cheaper price. And I think all of those future growth aspects are really going to help the company and the share price continue to surge. So thank you for watching, everyone. As you know, I'm the Gen Z Investor, and see you in tomorrow's video.